Gold is trading right now in the $4,900 area, roughly $4,900 per ounce, and moving fast as I speak. Just hours ago, when this episode was recorded, price was quietly holding above $4,900. But now we're seeing real selling pressure push markets lower. This is not hypothetical. This is live price action, reflecting genuine weakness and repricing in real time. What we're really seeing is a tug-of-war between safe haven demand and aggressive macro rotation out of bullion into risk assets. And that tug-of-war is printing volatility every minute of every session. Al Jazeera, Ploys 1. Subscribe the channel. Let's start the video. Right now, you need to understand three forces that are driving gold's current setup. Not rumors, not tweets, actual macro flows and financial mechanics. First, you have policy uncertainty at the Federal Reserve and shifting rate expectations. Traders were pricing in a dovish regime, then the narrative shifted, causing broad repositioning. The result was forced selling of leveraged long positions and a swift correction off the multi-year highs. That correction pushed price down into this $4,900 vicinity and is still reverberating through leveraged books across Asia, Europe, and the US. Al Jazeera second, gold is overbought on institutional books, and crowding has triggered de-risking. When so much capital is stacked into one asset class, any policy shift, dollar move, or macro headline can force rapid rotation. In the last week, this is manifested in some of the widest intraday ranges gold has seen in years, swings of hundreds of dollars within a few sessions, which tells you right away, this is not a retail fad. This is deep institutional repricing. Forex. Third, you have geopolitical tensions and safe haven flows being intermittently turned on and off by risk sentiment. On days when equities rally and risk appetite comes back online, capital rotates out of gold. On days when uncertainty spikes, gold reaccumulates. What we are seeing right now in this $4,900 neighborhood is reaction to macro headlines and repositioning of global capital, not random speculation. Al Jazeera. Now let's talk technicals, because in a live, fast market, levels matter more than narratives. Around $4,900, you have a massive pivot zone where institutions are testing the real depth of bids and offers. Below the mid 4,900s, the next key support zone appears between $4,150s and $4,170. That's where the smart money steps in on dips historically. If price pushes below that without slowing, the next credible support is in the $4,800, $4,820 range, which analysts view as a high probability demand area. Beyond that, a deeper technical floor sits near $4,850, a structural level repeated across multiple global trading desks as a pivot for longer timeframes. Brave new coin. On the upside, don't get carried away by a temporary bounce. Above current price, resistance clusters around $4,140, $4,960. This is where overhead supply is concentrated. Brave new coin. Here's the part most commentators won't tell you. Momentum and structural direction are not the same thing. Momentum tells you where price is heading minute by minute. Structure tells you what the market is prepared to defend. Right now, structure around $4,900 is telling the world. Institutions are not folding. They're adjusting. They're testing bid support. They're absorbing supply at this level. What you're watching is a real redistribution of risk, not a collapse. Forex. Now let's get tactical. In the next 12 hours, actively watch $4,150, $4,270 as your first major intra-session support. If gold stabilizes there and shows buying interest, that is where professional capital will reload and tighten stop levels. If price slips below and volume spikes, expect a quick move toward $4,800 and fast. On the upside, a sustained break above $4,140 will flip short-term bias back bullish and invite fresh accumulation toward $5,000. That is the narrow range where we separate professional money from retail fear. Brave new coin here is the truth you don't hear on TikTok or meme finance channels. This market moves because real balance sheets are adjusting, not because a YouTuber called a breakout. Right now, price near $4,900 is the result of global macro forces in play, not hype. And because you're watching live with the market breathing on this number, you're seeing the raw mechanics of capital flow, risk repricing, and liquidity rotation. Al Jazeera. So what do you do right now? First, define your risk boundaries. Swing traders should treat $4,150, $4,170 as critical intraday support and adjust stops below that. Brave new coin. And yes, this video took time to record, edit, and produce. Markets have moved since we began. That is the reality of live trading conditions. Price was closer to $4,113 when we started filming, and now we're seeing price action near $4,900, $4,905 as of this moment. That's the difference between anchor bias and real price action. You can either trade from the screen number you think is static, or trade the number you know is changing. Al Jazeera. So lock in your critical levels, manage risk, and remember this: Volatility is not bearish, it is information flow. This market speaks through price, and right now, gold at $4,900 is speaking directly to anyone paying attention.